Hi, Tim Bigham back again for Delta Derivatives, Option Hedges and Edges, taking a look at a market that's coming back a little this morning after yesterday's big bloodbath, one of the biggest down days of the year. We saw implied vol, the VIX, jump from kind of that mid-12 level to over 17. We're seeing it creep back below 16 here, but certainly still elevated. I kind of like selling both sides of the market here using kind of a one standard deviation methodology on the major indices, S&P 500, the NASI, the Dow, just looking to sell the regular July traditional out of the money call spreads and put spreads both, about one standard deviation on both sides. The fact that the VIX exploded here means that area is much wider for the same net credit. I just think given the damage we saw yesterday on some of these names, the market's probably due for a period of consolidation. Certainly doing the same thing, especially on some of those big momentum names that finally came crashing back down to earth. You know, looking at stocks like Netflix using that kind of all-time highs that we saw around that 425 level to sell our calls, and then hedging by buying the 430 calls. Same thing with Facebook, right around that 205 level, hedging with the 207.50s. Amazon, which got up to 1750-ish, using that 1780, 1800 sort of call spread methodology. Really looking for the market not to make appreciable new highs over the coming month, given the fact that they pulled back so sharply, and more importantly, given the fact that they rallied so hard in the prior couple months here. So I think they got ahead of themselves. It will take a while for them to head back higher here, take advantage of implied vol, jumping up big time, especially on those names as well. Another name we're looking at, Alibaba. 2 weeks ago was at all-time highs at 210, implied vol at yearly lows. Yesterday we saw the stock down 10% in less than 2 weeks, implied vol jumping to the highest post-earnings level we've seen. So again, they're using out-of-the-money put spreads in this case to be buyer of BABA on further weakness. The 175, 170 July put spread. In fact, BABA's around 190 here. I think I'd be a buyer on certainly another 10% pullback on that name as well. Otherwise, entering into a normally kind of quiet period, obviously with the 4th coming up, and seasonally kind of a dead spot in the market as well. Although buybacks, which have fueled this market, probably will begin in earnest again towards the end of July. So we're kind of in a dead period for that as well. So until next time, as always, here's a good trading, and to everyone out there, have a happy and safe 4th. Take care.